Hello, it's Robert Miner with Dynamic Traders Group with our reasonably short video for our YouTube and Twitter followers. Similar to what we do for our DT Report subscribers, but we do it for them in much more depth and, of course, with all the major markets. We're going to take a look this week at the euro and the dollar, but this coming week, I think is going to be important, not just for the euro and the dollar, but for the stock indexes. We have some major targets that are being met in the stock indexes, time and price pattern and momentum targets. Also for gold, silver, and the GDX, as well as for Bitcoin. If you want to learn about all those other markets, check out our DT reports. Today we're going to take a look at the euro and the dollar. Great trade setup, I believe, coming up here in the next couple of days. So let's take a look at it. So this is the euro weekly data. I think there's just a great trade coming up in the euro early this coming week. That'd be long the euro, short the dollar. Let's take a look at it. Weekly data coming into the end of this last week. The weekly momentums are dual look back oversold, and they have been for a couple weeks. And that's in a position from which warns us that a weekly low is very near, if not already complete. Coming off of the January high, looks like a really nice five-wave decline. And what's compelling here is coming off of the February high is this last section down is subdividing nicely into five waves. So from an Elliott wave perspective, this is like textbook multiple time frame, multiple degrees of completing a higher time frame trend, probably much more significant than just a weekly low. Of course, then that would be a more significant than a weekly high in the dollar. Let's ratchet down, get into the daily and the intraday data. Here's the daily data coming off the March high, and we can subdivide that into potential 1, 2, 3, 4, and then a 5 to a new low. This is like textbook stuff. And what's the beauty of this is I had in our Wednesday report for DT Report subscribers that even though the weekly momentums were in the oversold area and were near a major time target to complete a low, more than likely the euro would spike down to a new low before this decline was complete, because this area over this past couple of weeks is very much a corrective kind of pattern. And that strongly indicated that the euro was likely to make a new low before it completed not just this series of decline, but let's go back to the weekly, all the way back from the January high. So whenever we're looking at multiple time frames, multiple levels, multiple degrees, is ideally we get down into that final section and we can see it subdivide, because when that final section is complete, then the higher time frame is complete. That's true multiple time frame trade strategies, and that's right where we're at right now. So let's take a look at this, and then we're going to go down the 240-minute data. This is the daily data. So there's a couple things going on here that's of significance. As of the end of the week, this is Friday's data, the 8 daily momentum made a bull reversal. However, the 13 is bearish. We usually want those to be in the same position, the same direction, to be in sync with each other, to have a really high probability trade setup to get to develop a specific trade strategy. They're not in sync. When they get in sync, that's when we want to go all out with the trade strategy. Let's go down to the intraday data, because this is where it gets interesting from my point of view. Coming off of the high just a few days ago, if we look at this 240-minute data, that's what we got here. It looks like this is like, I don't know, 3 degrees down, pretty short term. But this is a potential 1, 2, 3, 4 going into Friday. If that's the case, and I'm not forecasting this because only suckers forecast. So we don't forecast at Dynamic Traders Group. We identify trade opportunities. We're in it to make money, not to be right. So let's take a look here. If this the euro were to decline on Monday or Tuesday, and probably it's going to be within those first couple of days, if it's going to do it, to a new low. That would actually be the ideal setup. It would complete this little minor 1, 2, 3, 4, 5. If it made a new low and then came back up and took out what I got labeled as a little wave 4 high. I'm not forecasting that's going to happen. What I'm doing is I'm setting up a scenario that should it occur, then every single thing would be in place to get on the long side. So that's one possibility for Monday. Regardless of what it does in the early part of the week, we want to be aware that we're within days of completing a weekly low. So the other thing I'd look at Monday is if by chance the euro were to close higher, that itself, with a higher close, would confirm the 8 weekly momentum bull reversal. But here's the super signal, the signal that just nails it completely for a weekly, if not a monthly low, and that's a close above 1.04977. That's the April 28th closing low. That's this closing low. That's a closing overlap, and that signals that the weekly low is complete, and more than likely a weekly low is going to become a monthly low. So what we look at, and what I should say I look at for trade opportunities, I really want to look at weekly trends, those trends that are probably going to last at least 2 to 3 weeks. So that's what I'm looking at for the first of next week, is that opportunity to position on the long side following a confirmed reversal. That's what we're going to follow up on Monday with our DT report subscribers. But I've given you enough information here that if you can't develop a get long trade strategy, then you got no business having a trading account. I hate to say that, don't want to be brutal, but it's that clearly defined a setup that you really should take advantage of it. This is the dollar index weekly data. It's the continuous data, continuous contract. Here's what I've been telling our subscribers in the last 2 or 3 weeks, is that as the dollar approached, this is the March 2020 high, I told them is that should the dollar break above it, I don't know if it's going to or not, but if it does, a lot of people are going to think that's a really bullish signal. The thing is, what we want to be aware of is the weekly momentum cycles were reaching an extreme. That's a dual look back overbought position, real high probability position to complete a weekly high. There are some price relationships and some pattern relationships also in the dollar. Well, here, let me just mention one. This is just real simple. You don't need computers, you don't need anything. This is from back in the days when we used to draw all of our charts by hand before anybody had a computer. Yeah, most of you don't know those days. But anyway, here we have a normal sort of advanced correction, and then just a very orderly advanced corrections. And then beginning in January, the higher rate of change of this advance. And it's, some people call it a momentum increase. It's really just a rate of change or a speed increase. Now look at these last few weeks. This is really typical of the final section of a trend, the blow off, the panic buying, the speculative buying, people getting in near the end of the trend. And that's a real common situation when a trend's almost over. It's the final section. It's just as in a bear trend frequently ends on panic selling, an accelerated selling section that's usually near the end of the trend. Well, again, broke out this past week clearly above the March 2020 high. Just keep in mind that everything's at the extreme, probably to complete not only a multi-week, but probably a multi-month top. So we never know what's going to happen. What we do is we identify setups and conditions with a high probability outcome to where we can take a specific trade position with very minimal and limited capital exposure to take advantage of that position. I think that's where we're at right now with the euro on the making a weekly, if not a monthly low, dollar making a weekly, if not a monthly high. And boy, you should see the position that some of the stock indexes, gold, silver, GDX, and Bitcoin are in. They're nearing almost textbook target zones for making reversals. Not quite there, almost there. Now check out our DT reports if you're interested in following up on these markets on a regular basis throughout the week. That's it for today. Robert Miner, over and out for now. Stay safe, stay healthy. I'll see you next week. Take care.